If I'm a musician, I receive money from my record label, or I'm an author, I get a royalty from time to time. So these types of income are supposed to also be declared. They are supposed to be declared by a taxpayer when filing returns, meaning that a taxpayer is supposed to declare all his income from home and abroad, from all sources. But in most of the cases in Nigeria, they don't. So withholding tax seeks to bring such income into the tax net. Okay? By asking those who are making that payment to the taxpayer to withhold a percentage of it at source, pending the time that the taxpayer will now make that disclosure, aggregate it with the other sources of income, and then determine what tax is due. In some cases, it's possible that the tax withheld is in excess of what is due, in which case the taxpayer will be entitled to refund. And then where the tax due is higher than what has already been withheld, the taxpayer will pay the balance. So before I go on, I want to see whether somebody understands what I'm saying. So who would like to just speak to what I've just said before I then start going through the... So anyone who wants to intervene should please do so. Okay, Raimat.
Good morning, sir.
After Raimat, we'll have Faith here. Yeah.
Okay.
We have Faith here, yes.
From what I understand from what you have explained, withholding tax is a form of tax administration whereby the relevant tax authority takes the money, the unearned income or investment income from the company itself. For example, if I invest in a company and I get dividends, or I'm a music artist and I get royalties, that money is going to be taxed by the tax authorities before I get my income, so that if I get everything, I might not pay tax on that. But if it turns out that my tax rate is higher than the amount they have deducted, then I, as a taxpayer, I'm expected to pay the balance.
All right, thank you. That's a good effort. Let's listen to Fatia. Yeah.
All right, sir. Good morning, sir. With respect to what you said this morning, you started with saying that there's a new regulation for withholding tax, and that is the withholding tax regulation. There's a new withholding tax regulation of 2024. But before we assess that regulation, we need to understand what the previous regulation says, the gaps it adds, and the gaps that are to be filled by this new regulation. Then you went on to say the essence of withholding tax, and that is a tax that is imposed on people that earn from the stream of, or people that are covered by the umbrella term of unearned income, which is also known as investment income. And you gave the example of dividends from shares, as Rahima has said, and royalties from, for instance, a record label. And then you went on to explain how this tax is deducted, and you gave the explanation of the fact that when these things like dividends and royalties, when they are paid, a percentage will be deducted, then the aggregate of that percentage will then be paid to the tax authority. So two things can happen upon such payment. It's either you pay more than you ought to pay, or you pay less than you ought to pay. When the taxpayer pays more than is meant to be paid, there's going to be a refund. And when the taxpayer pays more than necessary, when the taxpayer does not pay up to what is meant to be paid, he would have to balance it at a subsequent payment. Sir, your mic is muted. Sir, your mic is muted.
Okay, thank you. So Ridwan, you will intervene subsequently. I saw you raised your hand. I'll come to you later. Now, you find judicial definition of withholding tax. In this case, you must be able to improve on it when you have understood what we are saying and simplify it. Withholding tax system is a form of tax administration which enables tax authorities to recover at source from taxable persons tax from payments made for certain services which such person rendered to another. What is deducted by the person who pays for the services is a percentage of the payment. If so deducted, when the taxable person's tax for the year is duly assessed, whatever has been deducted is credited to him in a manner that it does not pay tax twice on the same income accruing from that payment. So this judicial definition is not a perfect definition, but it's a good starting point. You'll see that it's talking about payment for certain services. Did I mention services when I was talking about withholding tax? No. But that is what withholding tax has become in Nigeria. Ideally, withholding tax is applied to unearned income. For example, if I have shares in and it even started by being applied to non-resident taxpayers. Remember, personal income tax is a tax that is charged on preceding year basis or paid on preceding year basis. This year, you'll be paying tax on your income of last year. But because the taxpayer may not be within the jurisdiction when tax is due, withholding tax was devised to collect tax when payment is being made to non-resident taxpayer. So if I have shares in an American company, let's say Tesla or X, before the companies pay to me, they ought to withhold tax because I will not be around during the filing season. So it was devised originally to collect tax in advance for non-resident taxpayers so that by the time the obligation is due, they won't be looking for the taxpayer. Later, it was expanded to unearned income or investment income. Income paid by somebody to a taxpayer in respect of either investment or certain entitlement. So the tax law imposes obligation of the payer of such income to withhold a percentage of it and remit to the tax authority. And when the taxpayer is now filing returns, the taxpayer is supposed to take account of the tax already paid and declare that income as well, together with other sources of income, determine the final tax position, and if the tax is less than what is due, he only pays the balance. But if it is more than what has already been paid, he's entitled to a refund. So this definition is not perfect, okay? So advantages, it curbs tax evasion in a number of ways. It captures income that may not have been declared or reported in annual returns, create audit trails in tracking tax evaders. You know, government is also able to get in the current year what would not have been due until the next tax year. It's also simple. It's as simple as I've explained it. It's also cheaper. You know, imagine a situation where I can ask somebody to do this lecture on my behalf. And I'm going to ask some of you in subsequent year to come and take classes. You know, that's why I want record of those who are participating. You know, I want those, the 20% in the class who are top, or maybe they are 10%. I'm going to ask you to take classes subsequently and say, well, you just go and take it in a tutorial form. Go and teach the class, take this, take this, take this. Those of you who are closing your mouth, you have been put on notice. So disadvantages, it imposes cost on agents of collection who are unpaid, exposes agents to liability for taxes, which are primarily that of others, by making them answerable. The scope is unwieldy and unclear. You can see that judicial definition did not even take account of the people who ordinarily are, the people who ordinarily were the focus of withholding tax. Problem in obtaining tax credit notes. You know, the tax paid, there should be a receipt and eventually a credit note, which the taxpayer is supposed to use when applying for deduction or net off, or when applying for refund. Then administrative problem relating to credit note. All these problems have been addressed. And you will see how the new regulation. So historical background, income taxes are usually annual taxes. Withholding tax initially applied in respect of non-resident taxpayer in other jurisdictions. Okay. Scope extended to passive or unearned income such as interest, dividend, rent, and royalties. Earned income is defined in paragraph 1 of first schedule to Peter as income from trade, business, profession, vocation, or employment carried on or exercised by the taxpayer. So unearned income, they are non-trading income. So bulk of taxes in Nigeria is collected through withholding tax. PAYE that we just looked at is a form of withholding tax, while the scope of withholding tax in VAT is getting wider. There is also withholding tax aspect of VAT. This you will learn in the second semester. So legal basis, section 69 to 73 of Peter, you know, section 69 to 72 are specific in respect of rent, interest, dividend, director's fee, while section 73 is general. Let me share that, Peter, with you so that you can be on terra firma. So this is Peter. The very smart ones among you don't learn personal income tax without being familiar with Peter. You know, it's the first thing I told you. So even if I'm not making references to it, check it, familiarize yourself with it so that your foundation can be very strong. So 70, this is the part 9, 68 payment of income tax, deduction of tax on rent, Please confirm that you are with me. Deduction of tax on interest, deduction
Yes,
of
sir.
tax on dividends, beautiful, deduction of tax on directors. You can see that they are specific. And nobody can argue against the basis of withholding tax in these circumstances. Then there's a general one, deduction of tax at source. I have difficulty with that. But there is no way you will understand what I want to spin unless there is foundation. We'll be talking about this in tutorials. Then there is penalty for failure to deduct tax. Penalty against who? Against the person making the payment. You know, ordinarily the person making the payment has no business not withholding tax. Okay, but I'm taking you to this again. Section 69, where a rent becomes due or payable to a person. I'm the owner of a house. The tenant is paying. The payer, the tenant, shall, at the date when the rent is paid or credited, whichever first occurs, deduct therefrom tax at the rate prescribed in subsection 2 of this section, and shall forthwith pay over to the relevant tax authority. You'll see that there is no way so technically all the tenants, they are supposed to be agents of collection, but if they are not registered with the tax authority, how is that possible? You can see how wide the scope of personal income tax is, and that is why the tax authority should have everybody on its database. So it means all tenants. But again, bear in mind that there are people living in a studio. There are even people living under the, unfortunately, under the bridge who are paying money to some folks. So again, a smart tax authority will focus on the 20%. No point going to Makoko and be collecting withholding tax on rent from tenants, some of who cannot even pay. And then look at the standard of living there. It's just based on the principle of de minimis. The tax authority should just say, so there should be a clear threshold for withholding tax as well. Okay? Tax at the rate of 10% of gross rent. So the same provision is replicated in accounting to the tax for the tax so deducted to the relevant tax authority. The payer shall state in writing the following: the gross amount, the amount of tax being accounted for, the name and address of the recipient and the period for which it, then the address or accurate description of the location of the property concerned, so that when the guy is coming to claim refund or net off, they can match, you know. The payer of a rent in subsection 1 of this section refers to a company, corporate or unincorporated, and includes government ministries. So you can see that the tax law is realistic to know that all the tenants cannot discharge this function. So it's limited to a company or those who are registered under the pay-as-you-earn. Why? Because the tax authority has their record. Otherwise, tenants will say, the law asks me to deduct 10%. I've deducted and I've sent it. This is your money. So you see that companies, you see that landlords will make an agreement that tax will be paid net of taxes. The way employees, especially expatriates, will also agree that salary will be paid net of taxes. So the legality of agreement, tax-free payment is another issue. Legality of tax prepayment. So be noting all these issues. Legality of tax-free payments. So the tax when paid to the tax shall be the final tax due from the non-resident. So you can see this. If the tenant is a non-resident, the tax due will be final payment. Final payment means that the non-resident is not expected to file returns anymore. I said if I have shares in Tesla or X or any of these other companies, tax will be withheld. After that, I have no further obligation to the US tax authority. They do not expect me to file any returns. I have no further obligation. We have the same thing in respect of interest, the same thing, replica provision in respect of dividends, the same provision in respect of director's fee. Because if you're a director in a company and they are making certain payments to you, you have to declare them. You have to declare all the payments. If they give you some toys, give you iPhone 17, they give you some state-of-the-art car, you have to declare them. So look at the general one. This is the one that I have difficulty with. And I want you to be on the lookout how this has been captured or couched in the new regulation. Income tax assessable on a person, whether or not assessment has been made, shall if the tax authority so direct be recoverable from any payment made by any person, then a direction under subsection 1 of this section may apply. So this elaborate provision, pursuant to it, the minister has now made a regulation extending withholding tax to services, fees and services. Then let's look at the penalty. Any person or corporate person who being obliged to deduct tax under section 6 so fails to deduct or having deducted fails to remit. Some people will deduct, some people will fail to deduct, some people will deduct and fail to remit, within 30 days from the date the amount was deducted or the time the duty to deduct arose, shall be liable to a penalty of an amount of 10% of the tax not deducted or remitted in addition to the amount of tax not deducted, plus interest at the prevailing monetary rate. Interest is usually about 21%. So 10% plus 21% will be about 31%. That can be very huge. If you fail to deduct 100 million, so that means you will now pay 131 million. And it begins to accrue interest. In the case of government agency, the accountant general shall have power to deduct at source from the budgetary allocation of the agency. So let me now go back to the to the lecture notes. So confirm that I'm back to the right screen. Am I?
Not yet, sir.
Hello?
We can't see your screen yet.
Can you? Can you see it now?
Yes, we can. Yes, sir.
Okay, good. So these are the framework. We have just gone through it. I said, what do you think accounted for these legislative responses? The ministerial regulations, including tax regulation 2024, information circular. Then the administration is split between federal and state. Federal will collect for individuals, for companies, then state will collect for individuals. So basic principle, withholding tax is not a separate tax, but a convenient method of collecting tax, although it is usually treated as if it's a separate tax in practice. It is an advance payment of income tax. Credit is given for tax withheld when filing tax return on application. Withholding tax is used to offset tax liability either wholly or partly. Tax withheld from a rent due to a non-resident foreign taxpayer is a final tax. Tax withheld from interest and dividend is also final tax without any discrimination between resident and non-resident. Dividend, which has suffered withholding tax, is regarded as frank investment income. Please note that frank investment income, which is not taxed to charge to further tax. Okay. Withholding tax, strictly speaking, applies to income taxes. Therefore, credit received from withholding tax cannot be used to offset liability for other type of taxes, such as education tax. All those things are now being dealt with. You know, there's liberalization. You can use withholding tax against other type of taxes because all these things are making life difficult for businesses. A person making certain payments is under obligation to withhold and remit tax within 21 days, formally 30 days, when payment was made or credited. Different payments attract different rates depending on whether the beneficiary is an individual or a company. The person making the payment is an unpaid agent. Yes, is answerable for not withholding under withholding and non-remittance. Let me make some statement about different rates. Okay, I'll make it later. So you can see Peter rates. If you have a business name, you are subject to Peter rates. If you have a company, you are subject to CETA rates. So why will you pay 10% if you can pay 5%? So this is a tax planning option. For example, Abiola Sonny and Co. LP is liable to 5% of all the fees collected from clients. If Abiola Sonny and Co. is limited, it will pay 10%. So now, contract of supplies, what does it mean? The term contract of supply is defined as all supplies delivered or like through competitive bidding, tenders, LPO, or similar arrangement, whether oral or written, except across the counter sales or supplies in the ordinary course of sale. I want you to note ordinary course of sales. Remember, the scope of withholding tax had been expanded from this rent, dividend, interest, director fee to include all payments. So virtually, if a company is making payment to anybody now, the first question is this payment exempted from withholding tax? The general rule is that it is. So, but it's not feasible to withhold tax in all situations when you are buying and selling. Let me give you an example. I'm buying cement to build. I go to Dangote and I say, withholding tax asks me, regulations say I should withhold 5%. Dangote will increase its sale by 5%. So if the price of cement is 2,500 or 25,500, and I want to take 5% of that, it will add 5% to its price. So what is the implication of application of withholding tax to virtually everything? Let me pause and take a feedback. So if I'm under obligation to withhold tax from all payments, and you are the person supplying the good or services, what will you do when you are invoicing me for the good and service? So let me pause. So one of the 20% in the class, I want to see that you are following. Yes, Tiwalade.
Morning, sir. So I was thinking of this when you actually spoke about withholding tax on rent, is that they would factor in the amounts, they take into account the amounts they know that you are withholding so that they don't make a loss on their own prices.
Can you take it again, please?
That anyone who is supplying or providing any service, for instance, renting a house or selling something, would factor in the withholding tax that they know you're going to deduct from the amount you're paying to them. So it will make things more expensive.
Brilliant. So they will mark it up. So if I know I'm expecting 100, and I know once you take 5% or 10%, it becomes something less. I'm going, instead of saying 100, I'll say 110 or 105. So it's going to make prices go up. So people contract expressly that, look, their payment will be less of taxes. I said we will deal with that, you know. Sheyi, any assignment, priority should be given to those who contribute before you come to others. Okay? So this one, any assignment on withholding tax should be given to those who participate. We have already seen Raimat, we have seen Fetia, we have seen Tiwalade. So, agreement free of tax, is it legal? Some people have argued that it is illegal. You know, we have judicial decision confirming that. So now, relating to this contract of supply, of course, as a student, as students of contract, you know that contract is very pervasive. So if you are going to withhold tax on all payments, just going to be, it will even be, it will be inadministrable. The tax authority can handle it. Okay? So they now seek to limit it to contracts that are documented, contracts that where you have to tender, where you have to bid, where LPO is issued. Because all this will create audit trail, and then they are usually issued in formal setting, not informal setting. If I'm buying cement across the street, there won't be any documentation. Mama, how much is your cement? Say 25,000 per. Okay, I want 10. This is 250,000. But if I have to issue document, because the tax authority will come and audit the company, and the people, they usually audit their tax net. Okay? So the issue is what is ordinary cost of sale. This certainly in legal definitions is regarded to cover all types of contracts, whether it's not, except contracts following the two exceptions provided.
So we can't hear you again.
Who is that? Are you the only one?
Okay, you're back.
Okay. So the network could be from your end. Okay. So now that was illegally drafted. The new regulation has also taken care of it. So these are the exceptions. And these are the questions that I have. If Dangote is selling 10 bags of cement to Julius Berger is under obligation to withhold tax. In 7-Up company, it was said that supply of sugar and spare parts could qualify for withholding unless they fall under the exceptions. The onus is on the appellant who attempts to bring himself within the exception to produce evidence to the fact or to the effect. In the instant case, it was held that the onus was not discharged. So examining the validity or otherwise of the directive made pursuant to Section 72, you know, so who is liable to withhold? Individual, corporate bodies, government and ministries. Accounting, I've already addressed that by referring to the provision. Deduction is made in the currency of the transaction. Again, all these issues are being addressed. When you ask taxpayer to pay in dollars or in pounds, you are going to put pressure on demand for foreign currency in Nigeria, because they are going to source for those money in Nigeria. Why should the tax authority be asking for payment in foreign currency when foreign currency is not legal tender in Nigeria? So these are some of the reforms you will see in the withholding tax regulation and the current tax reform bill. Payment for individual and partnerships is remitted to the states. Payment must be made to the designated bank. Then credit notes. As soon as payment is made to the bank, credit notes ought to be issued. Okay? Now, I'm the taxpayer entitled to dividends. I've received dividend less tax. I'm supposed to be given a document which evidences the fact that tax has been withheld so that I can use it to net off. So penalties, there was a time when the law says that penalty is 200% of the tax that is supposed to be, but that was never enforced because it's impracticable. Okay? Accountant General may withhold tax. Okay? General problems. Government agencies usually fail to remit. Government agency is the highest culprit. And it also shows the level of tax culture in Nigeria. How will government agency default? I mean, taxes imposed, government agencies are being financed through taxpayers' money. They are being financed by taxes. And then there is obligation on them to withhold. They withhold, they do not remit. What are they doing with it? That's the first. That's one of the best evidence that our tax system does not work. It's not working. Delay in processing credit notes. Credit note had become like a scam because companies usually will not get credit notes. So there are businesses that are developed around credit note processing. So a company may have accumulated credit notes, which they are yet to get. So some folks will now say, we will help you collect your credit notes. Then they get all the information, use relationship within the tax authority to help them process it at a fee, maybe 15%, 20%. These are needless expenses being borne by company. So corruption, corrupt reading, I just spoke to a part of it, confusion in relation to, some people confuse withholding tax and VAT. So because we are here to deal with VAT, let us pen this until we get to VAT in the second semester. The general reluctance or failure by FRS to grant refund. Now, instead of granting refund, the tax authority will say, okay, you can carry it forward because they don't have money to give. And they will argue that, oh, your credit note is in respect of this tax. They will not allow you to net it off against another type of tax. Then initially, even when FRS or LRS have money to refund, they give preferential treatment to few companies. The matching concepts. Then they came with the dubious consensus that the credit notes can only be used against the year of assessment in which the transaction occurred. So if they withhold tax in respect of my dividends this year, they will say, look, you can only use it to net off your tax of this year. You can see that this is fraudulent. Okay? So matching concept, there is no such requirement in the law. Then application of wrong rates. When you have a situation like this, taxpayers are usually confused. Is it 10%? Is it 5%? A lot of them don't know how to check the law to confirm. So planning avenue, purchases made in the open markets as much as possible, splitting of invoices for reimbursables. Okay, registration of a firm to undertake the contract and invoice in the name of the firm in order to suffer a reduced withholding tax rate of 5%. Then when you are quoting, you should take account of withholding tax. Agreement to receive net of taxes. In the case of Total and Akipen a lease of a petrol station. The lessor agreed with the lessee that payment would be less of tax, net of tax. So there was a dispute between them, and then the tenant raised an issue about the legality of that clause. The court held that, look, there is nothing unlawful or against contrary to public policy in the clause, and upheld the agreement between taxpayer, the lessor and the lessee. They said, look, the agreement acknowledged the obligation to pay, but rather attempted to shift it to the lessee, and that it is legitimate. There is nothing wrong with that. Some people have argued that it is wrong. So prompt remittance within 21 days to avoid penalty. Ensure that there is an appropriate relationship between withholding tax credit and the turnover when filing income tax. Good record keeping. And if you are in doubt, seek opinion. Some people will come to you. If they don't come to you physically, they will come to you in an exam or say advice, right? Then we don't need to distinguish between the two because we really don't understand. So let me pause and then take questions. Let me take two comments. Read one. Do you have any intervention you'd like to make?
None for now, sir.
All right. So do we have any question on withholding tax? Or do you want to comment on any aspect? How do you see withholding tax? Do you like it? How do you see it as a taxpayer? How do you see it as a tax authority? So Mary, let's hear Mary and who again? And David Suberu, yeah.
Sir, please can you expatiate on credit notes, like how it actually works?
Okay, so Suberu, any question?
Yes, sir. Sir, please, I wanted to confirm, in the case of withholding taxation, where you and the company have an understanding to increase the rate in order to get, let's say you have negotiated an expected amount to be paid, right? You're rendering the service to them, but you now negotiate in the contract for a rate that if the withholding tax is removed, the original price negotiated would be what to be paid. Is there any offense there?
Okay. Agreement net of taxes. Who wants to answer these two questions? So read one, yeah. Which one do you want to answer? Answer just one, and let's
I want to answer the second one, sir.
Okay, beautiful.
Okay, thank you very much, sir. So, Prof mentioned, he has mentioned earlier that there are controversies regarding that. He mentioned the case of Tuta Onakin Pelu, where the court held that the agreement, there was an agreement that the payment was to be net of tax, and the court held that since the agreement recognized that tax was to be paid, but attempts to shift the burden on the lessee, it was legal. And he also mentioned that some people have argued that this payment net of tax agreement is not legal. So it is not settled. It is quite controversial.
So, and it's not negotiation about the rate unless you mean the contract sum. So if I know that my fee is 100 and 10% will be taken out of it, when I'm quoting, I'm going to say my fee is 110. So that when you take the 10%, I'll still get my 100. So employees, expatriates who understand that our tax system is convoluted, they say, I don't want issue with your tax authority. I want salary net of taxes. So if you are paying me $10,000 per month, I don't care how much you pay to the tax authority. But remember that if the organization is paying that money on behalf of the taxpayer, that money is also income, which will be taken into account when determining the income tax. So, Fetia, So you want to answer this the first question? Yeah. So go ahead.
All right, sir. Yeah, so with respect to credit notes, what I understand of it is that it is a proof of a fee owed to the taxpayer by the tax authority. Because I remember the part of the problems that were raised was the reluctance of FIRS to pay a refund by virtue of the credit note, and also the matching concept where a 1 year limit is placed on the credit note. So using that context, I would say that the credit note is just like a proof that, oh, the taxpayer, when remitting the tax to the tax authority, paid beyond what is necessary, and it's going to be an evidence or a document whereby you can use to record or file for the excess fee paid.
So let me throw a little light on it. I'm not liable to pay tax this year until March 31st, in relating to my income of last year. But last year, let's say in January, February, I've received dividends of 100 million. Okay? Or taxes have been withheld from money due to me. I'm supposed to have evidence of this tax withheld ahead of my filing in March this year. Usually, there are problems relating to getting this credit note because that's the evidence. Because in March, if I now file, I now state that my tax liability is X. If Y had already been deducted, I will net it off against X, which can then entitle me to a refund or pay more. The whole essence of credit note is to evidence the fact that tax has been withheld at source and to serve as a basis for netting it off against future tax obligation. It is convoluted. Industry has been built around it. I've also played in that industry in the past. Okay? So companies will say, oh, we have credit notes running into millions of naira. And you tell them, don't worry, I will help you process it. This is my fee. In fact, some people, that's what they do. But this should not be in a system that works. And you'll see how the new tax regulation deals with it clinically. So thank you for your intervention. Let me quickly close with presumptive tax. Then in the next class, we'll now deal with the new regulation on withholding tax. And then we can talk a little more about presumptive tax. So presumptive tax, this applies to informal sector. This is where you have the 80%, majority of who are struggling to eat. Ideally, they should be exempted from tax. But because some of them who are poor today can become billionaire tomorrow. Nigeria is one of the few countries in the world where you wake up today as a poor man, tomorrow you can be in billions. Because there are so many rent-seeking opportunities. Imagine a situation where just because you have access, then you turn it to money. Before you check results, pay. Before you see the deal, pay. Before some people can just say, I can help you check result, pay. I can help you facilitate a meeting with the deal, pay. So, what is presumptive tax? Generally, the concept of presumptive taxation or presumptive tax is used to describe a situation where income is based on average income rather than actual income. How much does a vulcanizer make? You won't see record of. He collects the money, he puts it in his pocket. He wants to buy bread, he will send it, wants to pay school. So income tax should be based on actual. It entails record keeping. In essence, there is a legal presumption that the taxpayer's income is equivalent or at the very least not less than an assumed amount. It should be noted that presumptive tax is not another type of tax, but simply a method for assessing tax. Typically, presumptive tax methodologies are targeted at small and medium-scale businesses and self-employed taxpayers as a result of their inability, in most cases, to comply with the complex legal provisions and practice required under a formal tax system, which more than often provides strong incentive for such businesses and individuals to avoid payment of tax altogether. Okay? Nature of presumptive tax can be described as a tax avoidance mechanism which aims at imposing tax on gross receipts where no accurate record exists, or taxpayers' record shows fake losses, or where it is difficult to ascertain the income of the taxpayer. Accordingly, presumptive tax is adopted for the determination of the taxable profit. It's just an attempt to say, let these people pay something. Under presumptive tax, there is no or low documentation as the taxpayer has typically not kept complete record. The tax authority therefore assess a taxpayer on the basis of perceived income. So a major challenge is the inability to identify the taxable person indeed. So we don't even know who the artisans are. You know what they have done in other countries. Even if you are sweeping the floor in developed country, you have to go to agencies, job agencies. You can't do any work abroad without going to agency. And that's the solution to all this problem. So the agency will register them. They will keep record of when they work and when they do not work. And then we will know who is working and who is not working. We will know what they are collecting. When they need help, government support, government already has a record. You don't have to ask them to come and queue. So look at it. Legal framework, section 24F, everybody must pay. Every citizen must pay. But is it realistic? No. There are people who are earning below the poverty line. Section 36(6) creates legal basis for presumptive tax. Notwithstanding, after all those provisions, do this, keep this, fight this. How many more minutes do we have? Okay. We are stopping at 11. Am I correct? Okay, 11.
Yes, sir.
So after all the requirements on register with tax authority, keep books, remit, do this, do that, then section 36 now says, notwithstanding any of the provisions of this act, where for all practical purposes, I mean, if you are supposed to keep record, you must keep it. There is penalty for failure to keep record. If you are a law firm now, you do not keep record. You cannot say it's impracticable. The income of the taxpayer cannot be ascertained or records are not kept in such a manner as will enable proper assessment of income. Then such a taxpayer shall be assessed on such terms and conditions as will be prescribed by the minister in regulation by order of the set under a presumptive tax regime. You see that this provision is convoluted. It's giving me headache. If this provision is giving you headache, can you please indicate? Can I see your answer? So this provision could have been worded in such a way that you read it once, you understand it. What is it saying? He's saying that, look, the minister can make regulation on the determination of the tax paid by people whose actual tax liability cannot be determined due to lack of adequate record or incomplete record. That is plain English. A number of things are significant from the wordings of the section, which we will attempt to unpack. Section 6 begins, subsection 6 begins with the phrase, notwithstanding any of the provisions of this act. The implication is that for the purposes of this section, all the other seemingly conflicting sections in the act will be subject to the provision of section 36(6). Hence, the section has overriding effect over all the other sections on how to ascertain tax, allowable deduction, all these expenses, capital allowance, and all that. So the section goes further to stipulate that presumptive tax will only be applicable in two circumstances, where for all practical purposes, the income of the taxpayer cannot be properly ascertained. Then where records are not kept so as to enable proper assessment of income. Note that in the first instance, the standard requires that for all practical purposes, it must be impossible. So you cannot claim that it is impossible because of your negligence. Businesses must keep record. Please note this. In other countries, you cannot mix business income with personal income. You cannot use your personal account to do business, because when they come into your business account, they want to take it as business expenses or business income. You cannot say, oh, it's my wife's money. What is your wife's money doing in your business account? It's evidence of tax evasion. Okay? So section 36 imposes obligation on the minister to come up. Up till now, that regulation has not been made. Dr. Lauren, can you please mute? Up till now, the minister has not made that regulation. So states are now coming to make regulation. Kaduna State and a few other states. So, and what they did was basically to have a table or schedule where they say, oh, if you are a vulcanizer and you are at this level, they have tier 1, tier 2, tier 3. This is how much you pay, maybe 200 naira per month. If you are in tier 2, you pay 500. If you are in tier 3, you pay 1,000 or 1,500. So I will share with you the law of Kaduna State. But this is it. The 5th schedule to the act. Did I say to the act? To the law. Contains a comprehensive breakdown of different types of nano businesses, micro or nano businesses. Each business is further categorized into 3 bands of micro, small, and medium business. The tax payable annually is dependent on the band to which a business belongs. For example, a barber hairdressing salon business is liable to pay 2,500 annually. If it is a micro business, 12,000 annually. If it is a small business, 25,000 annually. If it is a medium business. The law does not state how to determine whether a business is micro. They'll just look at you. You know, there are some barbing salons that are executive in nature. In fact, there are some places I barb when I'm out of Lagos. And I say, is barbing even not more profitable than some of these white-collar jobs? Because the amount they charge is not small money. So it's premium. So that type of salon cannot pay the same type of salon where in Jaja or in Yem shopping complex. So why Kano State must be credited for this laudable effort at coming up with a similarly robust framework for presumptive tax? It is clear that this law, at least provision relating to presumptive tax, is in obvious violation of the provision of Peter. Peter, being a federal statute, has already provided how presumptive tax regime must be established. And then the responsibility is that of the minister. So I made some comments on that. You know, when you centralize taxes and you give taxing power to another level of government in respect of the revenue of another level, if the level of government that has taxing power has no incentive to reform the law is just going to remain the way it has been. And this is what we have relating to personal income tax and also presumptive tax regulation. So to what extent is presumptive tax an income tax? It's not an income tax in the sense that income tax is based on actual. It's based on you declaring coming clean and say, this is how much I make, and you declare income from all sources. You have to come clean. The Romans did not like income tax because it's like a baron or a mayor telling a tax official, this is how much I make. It's like stripping themselves naked before the tax authority, declaring what they carry. People don't want to make such disclosure. So people don't like income tax because people can easily get into trouble on account of income tax. There was a time when Clinton made a lot of money from his books and he failed to declare it. The IRS flagged him. You know, they said that law is no respecter of any person. But all over the world, law respects certain persons. These are issues for rule of law. You know, so they had to deal with him gently and ask him to go and file. It's not an excuse that people file your return on your behalf. It's not an excuse. Okay? So to what extent, it's not an income tax, truly speaking, but if provision is made for presumptive tax under income tax, then it becomes an aspect of income tax in Nigeria. So we will deal with other critical issues arising from presumptive tax. Let me pause here and let me take one or two comments. So do you have any comments? Presumptive tax? Do you have a better understanding of income tax or personal income tax? Mubarak, yes.
Yes, good morning, sir. So I would just like to ask if or why rather the de minimis rule does not apply to micro business owners with respect to presumptive tax. Because if we're talking about charging tax rates such as 200 naira, 500 naira from business owners who are struggling to even earn a living, then doesn't that sort of create some sort of inconvenience for them and should perhaps be provided under the de minimis rule in the sense where, you know, they are relieved of the burden to pay tax despite the amount of inconvenience that, you know, they are dealing with as small business owners?
So that's brilliant. That's a very brilliant question. Mubarak, I want you to look at the new regulations and presumptive tax, the new withholding tax regulation and presumptive tax. Okay? Your question is good. The new tax reform. Now, if you earn a minimum wage of 80,000 per month, no tax. The people at this level, some of them earn less than half of that. On what basis are you going to be taxing them? Are you with me? So there should be, the case you are making now, Mubarak, is there should be a threshold also for withholding tax, for presumptive tax, which makes sense. Otherwise, you will be exempting people in the formal sector who are earning minimum wage from tax, while you are imposing tax or collecting tax from those who are in the informal sector for reasons that you have brilliantly stated. So we'll see how the reform are taking care of that. I'm happy about that question. It shows proper understanding of what I've been teaching you along the line. You obviously belong to the 20%. So who else? Anybody in the 20% who wants to also intervene? Okay, so we meet in the next class. I will talk to when is the next class? Friday. Hello?
Tomorrow, 2 p.m., sir.
Is it tomorrow morning?
Tomorrow afternoon, sir.
Tomorrow afternoon. Okay. Tomorrow afternoon, I'm going to be engaged. So is it possible for us to have the class early? Tomorrow afternoon, what time? 2 o'clock?
2 p.m., sir. Yes, sir.
2 p.m. Okay, I will try. It's not going to be convenient. Are you free tomorrow? You know what? Let us reschedule tomorrow's class so that I'm not under pressure. So let us reschedule it. So we'll be discussing the new withholding tax regulation. I will share it with the class. Read about withholding tax, the new withholding tax regulation in advance, and bear in mind that our job is to critique. You know, all these reforms are being made. We are the experts. We are going to tear it apart. We are going to say, oh, you guys have done so well relating to this. I wonder why you did not see this gap, and you identified that gap for future intervention. So you will be saying that, look, the Taiwo Udele group, including your prof, had done a good job in this respect, but it beats me why they left some of these patent issues. You know, how will you do a reform and not see this? Then you are telling them that we belong to the 20% in the tax class, and this is what we have been able to dig up for improvement of our tax system. So if you don't have this foundation, it's difficult to engage at that level. So thank you. The governor will get back to you on when the meeting will be. It could be over the weekend.